Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's day is the 28th of November 2016. The trap we're going to look at today is what I refer to as a trap break pullback, which has occurred in this area here. I'm just going to make this a little bit bigger than normal so that you can, this circle, so that you can see in a little bit more detail why I've selected that area. And basically one of the major core principles about being able to trade traps effectively is to be able to understand where retracement traders would be likely to take trades. We talked about this in Friday's video where I mentioned that retracement traders that use historical levels tend to give that particular setup a little bit more credence than they would normally give if you were just to put a random Fibonacci level on a chart. They'll use Fibonacci levels as well, and trend lines and things like confluence is king. So the more of that goes on, the higher the scoring, the grading of that particular setup. So for example, forgive my handwriting, but imagine this as a trend line, right? A nicely drawn one. Pretty decent, about a 45-degree angle, something like that. It's a textbook type of trend line. Touched once, twice, thrice, 4 times. And on the 5th occasion, what happens at the hard right edge, right? This is all new in real time. This void is kind of ignored, and people focus massively in on the price action at the here and now, the movement of the price lining up with that historical level of support. So as it pops up, it doesn't respect it as it comes down through it. It comes back up through that level, but when it returns back, it bounces off it there, so it becomes support again, yet to be resistance. But as it breaks this time round and it starts to sell off, you can see that we have this nice hammer candle, and that's essentially selling in that wick, and then it comes up to the level and you get a nice candle formation which is negative. So the trader who would be looking at this and analysing this in real time would look at the reaction and this big wick off the underside of that level and recognize that people were starting to sell, right? Because a retracement trader loves prior levels becoming new levels, so prior support becomes new resistance, and that's kind of the idea. So this represents that would have been like a heads up for somebody to think, oh, hang on a minute, this is actually being respected. And then when you get these negative candles, or this candle formation, or this swing point, right, a high surrounded by a couple of lower highs, right, nice swing point, so it looks like that. Maybe they went in on the first negative candle, maybe on the second, but the point is, the more convincing that is, the better. And the belief would be that the market would continue to make lower lows, right? So it's in a trend. Lower highs, lower lows, lower highs, lower lows, etc, etc. So the idea is, puts in here, puts in that new low, and as it pulls back, this looks like a good place to get short. You could maybe have some type of Fibonacci on there. Let me just change the colour, just bear with me. I can't draw it, unfortunately, because I'm busy drawing on the chart, but you would place it where the move originated from, down to the low, and then pop it back up, and essentially that looks something, you know, in the vicinity of a 68% fib. So that's good news. So you've got confluence here, and that really is what the retracement trader seeks. As I say, if you just have a random you know, Fibonacci figure with no real structure or any other confirming factors, then it's kind of graded lower in the scale of how much quality has been associated with the trade. There is a quality element to trades, and you know, the sooner someone kind of recognizes that, the better, because what that does is it allows you to filter out the ones that are not so good and focus on the ones that are. And as trap trading protagonists, what we're trying to do is look for these locations on a chart where traders are likely to make these decisions, where retracement traders are going to get involved, where the other different types of traders will be looking to get involved, and we're essentially doing so, which from the perspective of it's like a reflection of our own behavior. If I was to suddenly take up retracement trading all of a sudden, I would look for these confirming factors, and the more of them I had, the more I would like that setup. The more obvious the patterns and things, the more things going for it, that to me would represent a good looking trade. And if it's an obvious move, and if it's for instance, like, you kind of can't deny we're in a trending type environment, that context prior to the actual trap itself setting creates the interest in the patterns, so that then once you have an understanding that, oh, okay, this is maybe heading down, it's trending, it's making a series of lower highs, lower lows, yeah, I'm interested, right? Then what am I going to do? I'm going to start doing my analysis. So, imagine if I had a stochastic underneath here, the stochastic would be overdone, right? It would be overbought, it would be up in the 70, 80 region. So that's a definite sell, so we could use that as confluence. Maybe we had a MACD and it was below the zero line, right, the midpoint, and it was looking something similar to that. Excellent, it's in a downtrend, nice trend line, touched once, twice, thrice, great. This looks like a bounce off that trend line, and not only that, it's the underside of that historical support, right? So this is now support, and the idea is it then becomes resistance. That's present. The candle pattern is then the final coup de grace, if you like, the entry cheese that tempts the trader in off the sidelines and gets them to commit capital. Because if that final part, the entry cheese, does not occur, no one will take the trade. Because if price if we do all that analysis and it looks like it's a good setup, well then price screams vertical through that level and it goes really quickly, people will avoid the setup. Right, you know this because you would do that, right? That's what that's one of the processes that makes up being able to trade traps effectively. It's essentially a mirror image of your own behavior historically. So if you wouldn't do it, then there's a good chance that other people wouldn't do it as well. So that's why the entry cheese element is like the final part to it. It's like has to happen in order for you to come in and commit some risk, right? Commit some money, because it doesn't matter, you might have $1 million in your trading account. If you don't come in off the sidelines, I can't and others can't attempt to take that money from you, right? It's just a transfer of accounts. Here's an account with some money in it, and here's an account with some money in it, and someone's going to lose and gain that money. We don't make anything. It's a transfer of accounts over to the people who made the right choice in that moment. But here's the thing: when you're taking this retracement trade, you don't think you're doing anything wrong, and that's the gaff, because all the textbooks and so-called gurus and courses that you may have taken tell you that confluence is king, and that's why so many people are confounded, because it seems as if they've done the right thing, but then when they take the trades and at the hard rate edge it looks as if it's working, right, and then it goes against them, and that's obviously where the frustration is. It's like, what am I doing wrong? And it's not that you're doing anything wrong in the sense that that's how you've been taught. The problem is, in order to make money, we've got to take it off people, and the people who we're taking it off are not stupid people, right? I've lost count of the amount of people who are multilingual, well-educated business owners, etc., yet they keep getting caught out by this phenomenon. So if this continues to break a little higher and pull back, this doesn't look like a terrible trade. This looks like a pretty good trade. I'll get rid of some of that stuff so you can see it again. There's the trap. As traders believed that this was heading down, and then no sooner have they gone in, it's then caught them. So if you get a pullback, this looks like a pretty good place to get long. Just watch this level though, because there is some selling off there. It'd be nice if it gets up above there and then you can buy it. something like that would be pretty good. But that's a trap break, and then hopefully the pullback will come. Inevitably it does, and that's one of the many traps that I've identified. And if you'd be interested in learning more about traps, then it'd be great to see you in my trade room. Just click the link below. Have a great day, and I hope to see you there.